Hello, traders. Good morning. My name is Alberto Alvarado, as you can see in the presentation. I'm broadcasting live from Mexico City. Here is 8 a.m. in the morning. GMT time is 13 hours. Today is June the 9th, 2016. Today is Thursday. And I'm very happy today because this is the first time I will have the chance to broadcast for binary.com. I really appreciate this opportunity that binary.com is offering me to help other traders by sharing my experience and my very personal approach to the markets. So we will have a question and answers section at the end of the session. So feel free to put all your questions and answers during the presentation in the chat box. And at that time, when that time comes, the question and answer section, I will gladly answer it for you. Answer all the questions you have. I will be very happy to answer them. Okay? So, well, I believe it's time to start the webinar. Here a little bit of me, just my picture. And maybe you are wondering why the title is WoW trades. Well, the WoW trades is week over week trades. Because week over week, I will be showing up in binary.com, throwing my insights and ideas on the markets, and reviewing the trading setups that we analyze here to see how they are doing, if they are reliable or not, if they are profitable or not, for you to judge them. Because this will be live trading. This is not going to be something after the fact analysis. So everything that you will see here is the actual analysis that I do for my live trading. So as you can expect, I cannot give away something that is useless because that wouldn't work for me. So I'm just curious if you could, in the chat box, just put where are you visiting us from, the country you are in, where you're listening, so I can have an idea where my voice is being listened now. So let's start. First of all, some food for the brain, something interesting to read. Here we go. Yes, about me, a little bit about me, and I think it's justified because the first time that I'm broadcasting for binary.com, well, my name is Alberto Alvarado, and as it states here, I'm a self-made professional trader. Why self-made? Because I didn't receive any help from anybody. I had to figure it out all by myself during more or less 10 years of experience. This has been really hard, really harsh, really tough, and thankfully, the traders today's traders have more than plenty tools, including webinars, to acquire valuable information and valuable experience from people that started before, that are willing to share their knowledge. It's something that I didn't have at my time, so I'm really happy to help because the objective for my webinars is to help reduce the learning curve for the beginners, to give more certainty and direction for the traders that are in what I call the break-even stage, that you win, lose at the end of the month. You are not doing nothing but not losing money, but not generating the profits that you want or that you deserve. And for the advanced traders, just to give them a more in-depth insight that could help maybe to polish or to increase, optimize their behavior as a trader. Okay. So, well, here's a little bit of my story. 2007, I started my first live trade was at 2005, more or less October, with some money I received from and inherited I lost it in 1 month. So after that, my learning curve started. Losing live money is what makes you really focus on what you should and you shouldn't do. By 2007, I started harvesting the efforts of my what I learned during 2 years. Then it came this almighty 2008 financial crisis, showing me that I was not ready yet. And after that, I completely switched my approach to including subjective and intuitional elements for my trading. And gradually, I could make it work for me. And those things are the ones that you're going to be able to see here, and that with some effort, you will be able to apply those elements to help you develop your very own edge that is necessary to trade. By the way, an edge is nothing. Is something that you cannot buy. There is nothing. Is something that it's not outside. Is something that is inside you with your own resources. We will have plenty of time in other webinars to go a little bit more in depth of what edge, or at least how I understand the edge. That is only applying what you are already good at, but finding a way to apply it in trading. If you're a natural born trader, you should know it at the third, fourth, fifth month of your trading career, because you will succeed. But the most part of us need much more time and elements to develop a profitable edge. So my idea is to help adding the elements for everybody, that at that point they will be able to work with themselves, and then help them to make a more complete approach to trading. Well, in the future, I will be able to offer some coaching, maybe some more in-depth analysis. But so far, what I'm going to be focusing in is in this giveaway for all of you of my insights here. And at some time in the future, you will see maybe some other services that I could be including. As stated, I'm a self-made trader, so what I do all the time is trading. But it could be a good idea if the demand is enough from you. If you decided that my information is valuable and you are requiring more of it, I would be more than happy to include it in a value-added services. But let's see how this goes, and you're going to be the judges of if what I talk about here is useful or not. Today's agenda. Today's agenda. Here it says previous week fundamental highlights. By the way, one of the approach of this webinar is going to be learning how to read the fundamental data. It's not the same as trading the news. Trading the news is trading the noise. What we're going to do here is to learn how to do fundamental trading, meaning reading from the fingerprints of price action after the news to really know what the price action and the movement meant. It's not that easy as it could seem. It requires a lot of back analysis to see how the market behaved and reacted in the previous news releases, to see which and what kind of support and resistances were tested, the way they were tested, the time it took to be tested, etc., etc. We will have more time in the future to go more in depth with this. It's a complex thing, but it's something that when you add it up to the trading arsenal that you will have a clearer image of what could be what the markets could be heading for the next week, for the next month. The second part of this webinar is price action opportunities. In this case, what we're going to analyze, we'll be focusing on is the euro pound. I know that you are already aware of this Brexit thing, so that is why the trading opportunities that could be arising, the most interesting ones, are there in the pound crosses or in cable, that is the pound versus the United States dollar. But in this case, what we're going to analyze is the euro pound. And third, the live trades. If we find that a market is at correct levels to enter the market, well, we will show how to open a trade using binary.com platform, because it has plenty of different ways to, binary options help you to express your opinion on market conditions in a better way. Binary.com platform allows you not only to say this is going to close higher or lower than this price at this time, this day, but you can also put that if you believe that's going to happen a breakout, you can put the strike price above or lower than the price that is now, and you can play with those payouts to to lower your risk and to know how to manage it properly. So we will go also in depth for the very, very new ones in at binary.com to teach them how to start understanding those different options that you have to express your opinions on the euro pound or any cross or commodity that binary.com offers. The fourth part is going to be the question and answers. And let's go. Well, the previous week fundamental highlight is only one. You know, of course, which one is the non-farm payroll from last Friday. That, as you can see here in the presentation, and you already know it, we had it way below expectations. We were expecting almost 160,000, and we received barely 38. As you can see in the chart that is in the presentation, the right test bar is the latest one. As you can see, we have this yellow thing that is the forecasted number, so you can more or less have an idea of how deviated the number was. But you know what? In the next minutes, I will show you why this number and even non-farm payroll number is not as important as it was 6 months ago. And I will show you that in how the price behaved according to the volume. So just to have that in mind, not always just because you have a hugely deviated number means something special. It's strange to have that behavior in non-farm payroll, but in this case it happened. Okay, and the most likely thing is that any price reaction against the dollar was more than more cost. It was cost much more because of the revision of the previous month. That you can see the second bar from the right to left. It has a little black thing on the blue bar. That means the blue bar was the number, the previous month number. The gold thing is the forecasted number for that time, but the black one is the revision. So as you can see, the revision is lower. It's even lower than the number that we received last month. So that was what is most likely to have affected the markets. But as you will see, again, the volume will indicate us that no matter how bad this number was, the markets really didn't read it that badly. Here, what you're having is the last year non-farm payroll numbers compared to a linear regression projection based on different fundamental data. For the ones that are interested in knowing what this means, this is clearly going for the downside. This means that having the latest 1 year data, fundamental data, we can more or less project what is going to be expected for the next months. As you can see, this should mean that in the next months we could have negative data, something that is contradictory. I don't know if you have been aware that there's been some economists that are saying that the United States is in full employment, and that is the explanation of why we are receiving more and more below than expectations numbers in non-farm payroll. Well, apparently that is true. The United States economy is at full employment. That doesn't mean there is no unemployment, but that more than one people is having more than one job. So again, what we are going to learn during my different webinars here is how to read that, because you have to put everything in context over all the fundamental data to know how to add to do a correct fundamental analysis, to confirm it through price action after the news, to know exactly what that number meant. So just wanted to show you this because at this moment in time, maybe the non-farm payroll number is going to be less and less that important as it has been for the latest 10 years. The market is starting to consider that maybe the non-farm payroll number is not that precise, and it's maybe not the information that the markets really need to assess correctly how the United States economy is behaving. Because as you can see, if this is true, if this chart is true and these projections are true, that should mean that in the next months you're going to have job losses, people losing their jobs. Fundamentally, that's not precisely what the economists expect because, yes, in fact, the American economy is behaving well. So we are getting into a point that the way that they are measuring the non-farm payroll aspect maybe is reaching its limits. What we're going to analyze here is the euro pound, and this is a little bit tricky, so I would kindly ask you to focus on the next explanation for the 5 minutes, 7 minutes, because this will add very valuable information. Okay, so I will just let this chart for 30 seconds for you to watch it. And in the meanwhile, I'm going to read up something that's in the chat box because we have Tina Skier from Switzerland. Welcome to the webinar. Thanks for leaving, for saying where are you from. And in any case that you was not able to be from the beginning of the webinar, I am from Mexico, broadcasting from Mexico City. Well, what you're seeing now in the chart, the left hand is the euro value, the blue line, that little blue line that is going up and down, is the value of the euro dollar. In the right hand, you have the pound. That is that little line, blue line moving up and down. In the left hand, what you have in black is a pound value. In the right hand, the euro value. Why I'm doing this? Because when you're analyzing crosses, this is one of the best ways to see if there is truly an opportunity in opening a trade. As you know, usually the euro and the pound should be behaving more or less in the same way because they're really tied up. In theory, that should mean that euro pound doesn't move or moves really slowly. But when you have specific divergences in how the price is behaving, you can anticipate interesting movements in volatility and in certain direction of the markets. Okay, so just quickly reviewing, at the left hand, upper left hand, you have the euro in blue line, the pound in black. As you can see, it has been behaving and diverging. And now, there, the price is almost the same. So what we can read from that is that the market is at equilibrium. That maybe what you can expect is that you don't have a difference in let's say in proportion the market should be moving in tandem. So the euro pound should have not a lot of movement. In the right hand, you see that if you analyze the precise contrary, the, the British pound versus the euro dollar, what you will see there is that you have that little gap that should indicate that the pound has chances to go down to meet the euro value. The overall conclusion from these two charts is that from these four charts is that we are, first of all, if you have those prices inside the blue zone of this linear projection valuation, is that the price maybe won't move too much. But this analysis is taking different spatial dates that were relevant in my analysis. But I'm going to show you in the next slide. This is only just for you to compare how tight they look, and they usually look, and they should usually look. Here's the next one. I want you to draw your attention to the right hand, the both of them. As you can see, in those two ones, you have the valuation of the euro dollar and the pound. In both charts, in the right hand, you have the valuation of the euro dollar going outside that blue band. That means that the most likely thing that's going to happen is two things. Or the pound is going to move to meet the euro, or the euro will move to meet the pound value. What I'm talking about here is that, of course, you have you put the value of the dollar, you put the value of the pound in one single chart to have a reference of how much a currency have moved respecting to another. So here is where you confirm that actually you have a trading opportunity in the long term, or at least for the next 7-14 days in the euro pound. This is the only usage of this kind of charts. You can go and try them for yourself. You just your favorite charting package, the binary.com charting package. Overlay these two values, pound and dollar. Just not just stick to the euro pound value. Go and do this analysis, because in this analysis you will be able to start generating the experience that you need to read properly the crosses, not only the euro pound, but any cross. You need to start analyzing individually the pairs that are included in those crosses. And this is why I decided to start my webinars at binary.com analyzing the euro pound, because it's through maybe one of the best opportunities for the next week or 2 weeks overall because of this Brexit. And this divergence in data is precisely that. Is because precisely that is happening, this Brexit factor. Again, if you're interested in throwing a question in the chat box, just put it there, and in the question and answers section, I will be very happy to answer those questions. Here's a no-brainer chart. This is the Euro British Pound, plain and simple graphic that is different from the other ones. But as you can see, you can subtract way more information analyzing both euro and pound in tandem in one single chart. You will be able to subtract way more information. Here, the euro pound is telling you something really clear. We had a major breakout to the upside of this descending channel. As you can see, the confirmation was yesterday, 2 days ago, that the price retested that former resistance level, and it's preparing to test at least two prices, the 7,950 or the 8.8. This is the direction we're going to trade on markets in this time. And I'm going to teach you one of the hardest things for the binary option traders is to manage to detect the time span, the expiration date correctly. So let's go to the live analysis. Well, somebody could confirm that actually you are seeing my live chart. All good, perfect, Church. Thank you. And well, this is the Euro British Pound chart. I'm going to draw this the same trend lines that I drew on my latest presentation chart. Okay, here it is. So well, here is the mouse. I will try to move it in the way that you understand what I just did. This descending trend line here. You remember I told you that this was a confirmation of this breakout? Well, the price retested it, and now we're facing this new resistance. But we're still having bullish momentum on the euro pound. Later, after in next webinars that we have a little bit more time, I'm going to explain you why I believe that the markets got it all wrong. That a Brexit is already ruled out, and a Brexit should have increased the value of the pound, not making it lower. So, following that logic in my analysis that I will show you in some other webinars how I got to that idea, if a Brexit is ruled out, then the euro pound should go up. And as you can see, some days ago, the market started recognizing that. Why? Because if the UK doesn't leave the eurozone, the most benefited part is going to be the eurozone, not necessarily the UK. That's my opinion, and as you know, as traders, we always need to have our very own opinion and knowing how to defend it with hard data, with uh, objective information. So here, as you can see, what we're facing is that the market entered into a range after making this breakout, this very important breakout of this descending line. We had the price retesting it, so we have this, let's say, uncertainty zone, where the price could be there for long. I'm not expecting that. What I expect is the market will, in fact, retest the 79.50 that you can see is just above this newly descending trend line and the point 0.8, that psychological level. So what we're going to see now is how I use the Fibonacci time zones to make my predictions. Okay, as you can see here, we have Fibonacci time extensions. I choose, in this case, the most important points of this charting levels, and I put them in the respective bars. What you have next is plain and simple. Is where the market is most likely to change or accelerate the movement, and we're going to use that to make the trading decisions in this webinar. As you can see here, at this date, that is June 14th, that is in some days, we have high probabilities of having a completion of movement or an acceleration of one. We know that the Brexit referendum is going to take place 28th June, if I'm not wrong. So what we're looking for is some date more or less that matches that, 28 June, etc. So this is really close. Let's see if we can find something else. This 1.62 extension is June 20th. This is the one that we're looking for. Here, as you can see, well, I don't know if it's really visible. It's July 5, July the 5th. So that is should be the date that we should be looking for this kind of trade. As you can see, it will take 2 or 3 weeks. Let's just review if we can have a more precise one. Well, here it says if we match this low with this high, we will have the next time Fibonacci projection at June 26th. Let's take that. So that means that what we're going to see is that what we're going to do next is to open a trade to the upside, that is in this case the bias for the euro pound, based on this date, June 26th. As you can see here, we have our platform, binary platform, which is from Forex, Euro GBP, up and down. And we here in the end time, we're going to choose between duration and end time. We're going to choose end time, June 26th. That is, in this case, should be, let's say, June 27th. You choose your proper payout or your proper stake as you wish. As you can see here, we have a possibility, a payout of 118.3. That means what that means, that priced now is less probable than betting to the downside. But since we're betting on a fundamental Brexit outcome, these probabilities are the best ones to be played when this kind of scenario show up. Okay, so what we're going to do is to open one trade to the upside. As you can see, you have this contract confirmation that you will have a payout Euro GBP, which is strictly higher than the entry points at June 27th, July 27th, sorry. You have the payout, the total cost, and the potential profits. What we're going to do in the next webinar is to keep reviewing how this trade is doing to make the adjustments. Just want you to remind you something. Being a trader is not about being correct all the times, but knowing what to do with the losing trades and the winning ones. Knowing how to manage that is different. If the market changes bias direction in the next webinar, the next week, we will have to adjust that, or close that trade, or open other trades that compensate that. And I'm going to show you how to do that in my next presentation next week. So time has come for question and answers. Here it is. So, Cherise, if you have some questions from the attendees, and if you have some questions, feel free to drop it in the chat box. No questions yet? Okay. Well, then I believe it's everything for me today. A reminder, my name is Alberto Alvarado. I'm broadcasting from Mexico City. And again, this trade that we just opened needs to be managed. As you can see, it has almost a 1 month time frame. So we have almost 4 weeks to manage it. Opening, closing it, that's the thing of being a trader. Not rushing into things, not falling maybe in the temptation of if you see the market is going against you, just to close it because of that. Remember, market moves in waves. And having a movement against you at the end could mean that it's only confirming that your initial direction is correct, because it's taking and it's grabbing more momentum to go in the initial direction that you predicted. I will be more than happy to explain you more in depth how this works during my next webinars. So thank you very much, everybody, for showing up. Thanks, Shirtis. Thanks, Binary.com, for this fabulous opportunity to share my insights here. And trade safe, be safe, and bye-bye.